Bet. Damn. Yo, holy shit. I had it. All right, before we start, yo, I had a dream about this. All right, so usually, like, I have the guy, I'm kind of sidetracked at the start of fucking class. Um, so like when I pray, like I get dreams, right? And I feel like that's God talking to me. But I get dreams about things months in advance. So like I've had dreams like of things, and then like they'll happen like months later, and then like I'll remember. But specifically, this dream, I remember I was before I even was in the military or anything like that. I was all the way back in my mom's crib, and fucking what's it called? I had a dream, and it's literally just like this. We just started the recording, and I look at my markings like this. Like I'm not looking at like a specific chart. I just see this. That's pretty crazy. That's all I remember from that dream. But I know I've seen this before. That's crazy. It's like it's not deja vu, but it's like there's another word for it. Anyways, uh, what's up, everyone? 7 p.m. here, 7:17 p.m. Eastern Time. We're here on the last day of the year. Fucking what a damn year we've been through, man. Trading wise, learning, all that sweet money jazz right here. First of all, I want to appreciate y'all for supporting. Don't forget to drop a like, subscribe. Everybody here in the Discord, welcome, welcome, welcome. So, hey, let's get right into it. So, just to backtrack to a couple classes from before, a couple classes ago, class three, we started diving into the strategy right here. We went over the first two steps. So, this class, we're going to dive more into step 3 and 4, and then class five is going to be putting it all together. And class six will be watching you guys go on to every one of the students will have you guys go into FXReplay, which is basically backtesting old markets, and we'll watch you guys put the strategy together, and we'll get to see firsthand what you guys are having issues on, what you guys aren't. We'll also set you guys up on paper trading. That way, that now that we're going into this new year, we can get you guys right into this fucking market and start the year off. You guys already start paper trading. Hopefully, in about 3 months, we start getting you guys funded accounts even faster. If you pick it up even faster, we see you banging, see you consistently growing accounts. See good risk management. We'll get you guys on funded accounts and start fucking printing. But right here, we're going to start going over step 3 and 4. So basically, step 3 is going to be a 5 minute continuation confluence. It's going to be equilibrium, fair value gap, or if 2B happens, the SMT. So 2B is going to be if number one happens before market open, which is a liquidity sweep of either a 1 hour, 4 hour session on session low. You could also add in as well. This is preference, but if you want to add in daily highs, daily lows, data highs, data lows, basically when what I mean by data is when news comes out, you have like for example unemployment claims dropped at 8:30, right? So then we go to this 8:30 candle right here. This would be like a data low right here. This would be like lows and then like the high of that move. I want to say that's correct. Like that would be data lows and data highs. You can also use that as well. I don't really use it. I don't really. I mean, I'm banging trades without using it. So, but some people use that as a confluences as well, especially for news before like CPI, unemployment claims, FOMC. A lot of people use data highs, data lows as a confluence of liquidity. Um, you can also do daily highs and daily lows. So you're just going to the day candle here. Super easy to mark these out. Data highs, day highs and day lows. Basically, just go to mark this daily candle right here. You mark the low of the candle that closed and the high of that candle. Obviously, mark them a different color. Put these yellow. I don't know why these are all green right now. It's my bad. Let me delete the ones that have already been crossed through. So if you guys see these screens, these lines on my screen, these are basically my. This is how I mark my highs and lows. That way, if I have a low from like all the way back here, if I mark this low down here that hasn't been taken out, even days later, you see this line still goes through. And I only keep those lines there because I know that if it crosses a line that's on my screen, I know that's a liquidity point in some type of time frame. And it's going to be a higher time frame, whether 1 hour or 4 hour, and I have it marked for a reason. So that's why I keep it there. But usually once my lines don't mean shit, I start taking them out because it can get pretty confusing. But you see, we mark day highs and day lows. Now we come here. Now we see it on our screen. The day started right here. End of New York session. Started opening a new candle around 6 p.m. Hold up, let me see. Around 6 p.m. here. Yep, 6 p.m. is when market opens back up. Usually they shut down about every single day. They shut down for an hour after the New York session ends. Around like 5 p.m. they open back up at 6 p.m. just for maintenance issues and stuff like that. So they'll stop. I think, yeah, like stops at 5, starts back up at 6, and what's sometimes you'll get a gap in between those. Sometimes you won't. It just depends what happens between the hour. Maybe some news or Trump has a speech or something like that. But this is gonna be your basically your daily range right here. This right here is your entire daily range. You'll see your daily high for that day happened in New York session, and your daily low for that day happened down here in New York PM session. So it lets you see sometimes they'll be different. Sometimes, for example, on a daily candle, London will make the low, but then Asia will have the high. So not only do you have a daily high and a daily low sweep, but that's also a session high or a session low sweep. You can do that as well. I don't really do it, but hey, if you want to throw that in there as well, you might be banging off of that, then go ahead. You see, I go by the psychology that if it ain't broke, don't fix it. I'm not gonna fix nothing, but that's just to keep in mind if you guys want to do that. Um, but yeah, if we get a sweep before, that's where we use S&T divergence. So what is S&T divergence? I'll get into detail that right now because a lot of people are going to be confused on that. So S&T divergence, you have to find two indexes that are basically moving alike. Let me see if I can bring it up here side by side. Right here. Let's put this up right here so my computer doesn't shit on itself. Okay. Give me like 2 seconds. Okay. Now I can show you guys how S&T divergence works. All right, basically, we have two charts right here, right? We have NASDAQ and we have ES. So these both move the exact same, as you see right here. If we bring them both side by side, New York is exactly the same. And, they both basically mirror each other. When S&T divergence happens, let's say a sweep of the lows or a sweep of the highs, for example. If it sweeps, let's try and find one right here. New York AM back here. Let's see if that created S&T. Um, looks like it Looks like it didn't. Basically, all right, so you see right here, I'll show you guys. Basically, you have this high right here, right? Oh, fuck, wrong tool. Basically, you have this high right here to this right here, right? And then here on NASDAQ, you come over to NASDAQ or NQ, you have a high right here and boom right here. Oh, whoa. All right, you see both these white lines? You see how they're both creating new highs? That's not S&T divergence. Now, if, for example, for whatever reason, Nasdaq creates a higher high, right, on this move, right? But then NQ creates a lower high, and it looks something like this, and you delete this out the screen. Like if it looks something like this, if it looks something like this, and then Nasdaq looks something like this, ES is the leading index because ES didn't break this high right here. So this would be a S&T right here. If it went from here to here, and this went like this is the delayed index. Nasdaq is the delayed index. ES is the leading index. ES is kind of leading the future, kind of telling you, hey, we're about to go down. Market is not about to go up no more. We're about to go down. NQ is still trailing up. So don't trade on NQ, trade on ES. That's basically what S&T divergence tells you. It tells you that the market doesn't want to try and keep going up. The market actually wants to keep coming down. And that's how a lot of sellers, a lot of buyers in this case could get trapped, and vice versa. A lot of sellers could get trapped in a move thinking that, oh, Nasdaq created a higher high. We're definitely going higher. But if you look on ES created a lower high. ES is the leading index. We're definitely coming back down after the sweep of the liquidity on both. You can see how you can use that and paired up. I don't really use it. I don't like looking at two charts at once. I have banged some fucking crazy trades. I got my 150K account that I had funded. I used S&T divergences. I was banging like there was no tomorrow. I went like fucking 5 for 5 on that account. Got 150K funded. It was pretty crazy using S&T divergence. But especially if you're like at work and stuff, and you only have like your phone, or you only have one screen, and on your other screen you're doing work, and you can't use both screens like that to and just sit there and watch the market. Just you can bang on NQ. I bang on NQ. I just don't use S&T divergences because it makes it too difficult. I have to switch on my phone, and then it takes your focus off. You want to be fully focused up when you're on the market. So we'll just slide this over here for now. All right, boom. All right, but so that's S&T divergence explained. Oh, what else do we have right here? That's if 2B happens. So if you get a liquidity sweep pre-market, or if you just get a normal liquidity sweep, you can still use S&T divergence. I've never used S&T divergence pre-market. Every time I've used it has been like, hey, I see a liquidity sweep. Let's see if there's S&T getting created. That's how I see it as. But what I mainly use is equilibrium. Equilibrium, goaded as fuck. You can see I used it here today. Bang like crazy. And you can see that sometimes the confluence is paired up like it did today. Now I entered this trade pretty late today, because what's it called? I was gonna enter up here, but I was setting up my trading view because I was doing a church course online. Didn't get it set up in time and started dropping as you see this giant wick, and I didn't want to get in on that wick. When you see a wick like that, I'm not gonna FOMO. I'm just gonna wait till it close, and I had to wait for it to retest this fair value gap anyways. But what's it called? Yeah, you have equilibrium as well, which basically on a move is the equal point. So, for example, I'm gonna show you guys incorrectly marked equilibrium. This to this, that's not equilibrium because look, you have a down move. You have a down, you have a up, and then a down. Equilibrium would only be from this bullish candle to this bullish candle. It has to be a single move with no candle going in the wrong in like the opposite direction. So a great equilibrium to mark out would be this one. From here, you see all it's blue, 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 and then once the blue stops, boom, you have your equilibrium. So you could have marked this equilibrium. Honestly, could have caught this banker trade right here and got a way better entry. I didn't see that. You see, I'm not perfect. But what I did bang out was once I saw this giant drop, and because it was at the beginning of market, I also didn't want to get manipulated, so I put it on this move. But this was a news move, as you can see, around 8:30. We get giant candles up because we come here to data. We have unemployment claims, and unemployment claims was lower than forecasted. So when it comes to news, when it's green like this, lower than forecasted, especially for unemployment, just put two and two together. They're guessing that unemployment is going to be at 219K. Unemployment, the actual data came out at 199K. That's lower than expected. That's good for currency. People are getting into jobs. That's going to be good for the market. So the market is going to go up. There is one. There is one news event that does not read correctly on Forex Factory, and I got completely read last time. What was it? CPI. CPI. If it shows red, it is a bullish event. If it shows green, it is a bearish event. It is customer price inflation, consumer price inflation. I'm pretty sure it's CPI, yeah. So I want to say CPI, not 100% on that yet. I want to say this Wednesday I got cooked. I got cooked this Wednesday. CPI. I forgot that CPI is the news that we have to read differently. And I saw red and I was bearish, and price just kept going up. And I was like, why is price going up? It kicked back down. I thought, hey, this is a big giant bullish move. Got cooked. Not good. But CPI, be careful. If it reads green, it's bearish, meaning going down. If it reads blue, it's going up. I mean, if it reads red, it's going up because if forecasted right, if forecasted, and then the actual data is lower, that means inflation is getting lower. That's good for currency. We're going up. If actual data comes up higher than forecasted, if actual data comes out higher than forecasted, that means inflation is going up. Market's fucking gonna dip. I'll never forget that. But hey, we learn from our mistakes. So when it comes to news events, come to Forex Factory right here. FOMC, gotta be careful. Anything that's red folder, you want to be careful those days. You hop on, wait till news data comes out. News data will come out exactly at the time it says. If it says news is coming out at 8:30 Eastern time, be on here. It's gonna say pending, and then like 30 seconds later, it's gonna drop the data. You'll already see the market reacting because the market is gonna get the data first. But you shouldn't even be taking your entry just off data alone. You'll have time. That is gonna drop. You'll have like 5 to 10 minutes. Your conferences will play out, maybe even like 3 4 minutes, and then you see your conference. Hey, boom, everything's in. I get in. If news supports your bias, good to fucking go. Oh, what's it called? So right here we have equilibrium, like you saw earlier. Came up, got disrespected. I got in super late. Still bang TP right here. Got a 1 to 2. It was fucking fire, and I mean, look, market just kept going down. Market just kept going down. To be honest, I guess price. I mean, we're already in bearish. We're already in bearish price action. Market's been going down for a minute now, so it's good. We get this. I mean, I thought we were filling this weekly gap. We filled it obviously, and we're getting pretty anal right now on the market, but it is what it is. What other confluence do we have? We have fair value gaps, 5 minute confirmation fair value gap. So look right here, and look right here. Not only do we get a disrespect right here of equilibrium, you can use honestly either two of these equilibriums. Honestly, the first one I marked out over here is the better entry, but you saw right here I took the one on this bigger fair, this bigger one right here because I was waiting for the retrace up to then catch and move down. You can see that we disrespect the bullish equilibrium. We completely passed it. We respect the bearish equilibrium. It comes back up, doesn't even retest, it comes back down. But not only the reason I took this trade, not only did we not get a retest of the 50%, but we also had a fair value gap in support of that. We had a fair value gap in support of our movement down bearish. So you can see this two confluences right here on the 5 minute pairing together. That's just even more of an indication market is going to keep sinking. And especially to target these lows right here, because what is our closest high? I mean, these highs that were just created the other day. I mean, realistically, this if you got in this trade, like I wouldn't take this trade right here. I mean, you could have, to be honest. Yeah, like entries right here because it respects this fair value gap right here, but not even because 9:30 right here. Usually try and wait 15 minutes before market opens to catch a trade because you're gonna have a manipulation move. That's what I was waiting for. Because I thought we were bullish on the day first. I'm not even gonna lie to you. I thought we were bullish because of news. But ended up being bearish. And hey, I don't stick to don't marry your bias. Don't stick with your bias. If you think market is gonna go up that day, and market doesn't go up, you react to what market does, not what you think. Remember, you don't know nothing. The market's gonna tell you everything. The market's gonna tell you the story. And plus, because of our daily profile right here, we had London come up and then come down and then distribute to the upside because we have Asia consolidation, London manipulation right here to upside and then comes down and then distributes up. So, well, really, the manipulation is down. Then London distributes back up, right? That means that we're going to get a New York reversal. That is our daily profile right there. So even before New York opens, you should that just off of what Asia and London did, you could already tell what New York is going to come in and try to do. Usually, London distributes, you're gonna see a New York reversal. If London consolidates, you're gonna see a New York manipulation, and then continuation. That's usually what you're gonna see. There's three different daily profiles. I'll list those once I add them into the notes because they're not in the notes yet. I wanted you guys to figure it out on your own. Um, what's it called? Then what do we have going on right here? We have fair value gap. Fair value gap. If there was no equilibrium right here, if, let's say you didn't mark out this equilibrium. Let's say you didn't mark out this equilibrium, but guess what? This candle comes back up, and then you see this kick back down once you hop into the 1 minute. So boom, that's a 5 minute right there, right? A 5 minute confluence. You see it come kick up, and then you see this giant fair value gap right here. Man, honestly, that's where I got my entry at. See the giant fair value gap right here, boom, and you get a breaker structure on the 1 minute. That's your entry right there. That's step four, which is what we're gonna get into right now. Step four, you enter the 1 minute, you get a confirmation confluence. Breaker structure, inverse fair value gap, 79% extension, or you can use S&T divergence. I don't use S&T divergence on the 1 minute. I just don't have enough time to be switching back and forth. You get a breaker structure right here, right? Not only that, there was there was no inverse here as well. It was just a fair value gap and a breaker structure. So you get two confluences there. You don't get an inverse fair value gap. You get a normal fair value gap. So you get a normal fair value gap, and you get a breaker structure right here on this candle right here. You see this candle close lower than this blue one right here. This breaker structure. And we have a fat fair value gap that was right here. So marking it from this candle wick to this bottom wick right here. We had a fat fair value gap that didn't get disrespected until later. So this fair value gap, boom, could have entered. Obviously, consolidated a bit. And then market, started coming down. And boom, we eventually took those London lows. So that was entry today. But that's you seeing the strategy play out, especially during December price action. That's a pretty good, I would say, a pretty good trade. I took that one paper earlier. You can see market was not moving too good for New York. This is like pretty slow movement because it's New Year's Eve, about to get into a new year. Um, what's it called? I took partials on this one, but you can see got cooked. Actually, I would have been a cooked trade if I didn't take partials up here. But yeah, that's step three and step four. Basically, step four is identical to two. It's just you're dropping into the 1 minute. Once you drop into the 1 minute, it's like how you get your sniper entry. It's like you're like it goes from 1 hour, you're scanning the environment. And then boom, you see a person walking. Then you scope that, you zoom in a little bit more, and now you're on the 5 minute. Boom, boom, boom. Oh shit, is he friendly? Is he foe? Oh shit, he's an enemy. Once you confirm it's enemy, drop in even zoom in even more, and then your 1 minute is your kill shot entry. That's your kill shot direct entry. And then what do you usually once you enter step five? Once you enter, where do you put your stop loss? I like to put it above the second high the second previous high that it created. So let's say, for example, this isn't really good because I mean I just put it above this one right here, not to risk, not to risk too much because our target was close. So I just put it above there. If it disrespects that, then obviously we're going back up because this was already like it had already tested fair value gap. So if we go back up, then trade's cooked. So let's say if you see this right here on the 1 minute, right? Boom, kick down, boom, kick down, and you break your structure and you enter right here. Your stop loss is going to be up here because you have your first high right here, your first previous high right here, your second previous high right here. That's usually where you want to be your stop loss at. Or you could put it if you hop on a 5 minute and you could put it above a fair value, a 5 minute fair value gap. But I've been banging putting it above the second highs. I think it's safe if it takes out because then look, let's say your trade starts off and your trade does this, takes out your first high, but then trails down. Then you're still good. You had above the second high. But if the trade goes like this, comes up, takes out that high, comes down, and then does this, boom, your trade's already invalidated. Like we've already had like a break of structure, and now we're gonna continue higher. Or sometimes it's just gonna happen where market decides to eat ass, come out, take you out, and then go down. It's gonna happen. We can't control what the market does. We can only react. And a stop loss isn't mean that you lost on the day. You just it stops your fucking losses for the day. If your trade idea was wrong and you got stopped out, then take your fucking loss and move on. Come back tomorrow. The market's not going nowhere. Market's been around for fucking years, centuries, so you're gonna be fine. You don't have to make $1 million tomorrow. Yeah, that's how we get our sniper entries. That's really the setup right there. Anyone have any questions as of right now?
No, sir.
What about you, Zach? You got any questions? Or fuck me, I guess. Ryan, you got any questions? Yo, my phone is
No,
dead.
daddy.
All right, give me a second. Let me go fucking charge my phone. Probably getting phone calls, yo. All right, all right. So yeah, that's basically the strategy. I want to show you guys something else as well. I've been showing you guys. This is called FXReplay. This is a back testing. This is a back testing kind of like program website that you can use to back test to be able to trade the market and actually practice your strategy without a having to wait till the market opens and b being able to not actually risk your real money and go back and get data on your trades and be able to learn, hey, I fucked up here, and you're able to see how did I fuck up, what caused market to do this. So let's take a trade with you guys right here. I'll do 1 to 2 trades right here with you guys just to show you guys how I would analyze the market. So it's kind of a bit odd on back testing. It's gonna move a lot faster than the normal market, but this is me yesterday. I'm up. I started at $1,000 on this account. I'm up 655. That's 65% gains on an account. If you're on a 100K account, that's $65,000. If you're on $1 million account, that's $650,000. It's just with how much money is available to you. And obviously, once you're getting payouts from funded accounts, once you're getting payouts from your live account, that money's just going to compound and scale up and grow and grow. And eventually, you're going to be having 10, 20, 30K days. So, not a big deal at all. And we're only 9 days into this month and we're up already 600. So, let's see if we could turn it into two bands right now. So, let's get to this. So you'll see how I have this program set up. What day? Oh, look, perfect. Wait, oh shit. Wait, hold on. We're on a 1 hour right now. Whoop. Okay, what is this? All right, this is Tuesday. All right, we're just gonna fast forward to the next day. So let me go right here. So what I like to do, and what me and Zach do, we go here to the 1 hour. We mark our 9 o'clock time, and we drop down. And I just fast forward it. So this session right here represents New York. This is London. This is Asia. New York AM. Is from 9:30 to 11. So we'll just fast forward, see what market does till it gets to our time. Let's see if I can go a bit faster. Oh shit, hold up. Yeah, I knew something was off. Here, give me 2 seconds. I went a day ahead too far. Boom. 9 o'clock is right here. Okay, bet. So we'll wait till we get to that candle right there, that 9 o'clock box, and we'll pause it. Boom. All right, bet. So now let's say what day are we on? We're on Wednesday right now. Wednesday is 9 a.m. in the morning. Let's just say you just came back from the gym and you're on for the market right now. You guys just sat down. You guys are opening thing at 9 o'clock. 30 minutes before market opens, you're looking at the market right now. What's the first thing you do? So basically, I'm going to break down what I do. First thing I'm doing, I'm going into my 1 hour time frame. Looking, all right, what lows do we mark out? Oh, shit, we got lows right here. What highs do we mark out? We got highs right here, which is also going to be London highs right here as well. You can tell by the session right here. What other highs do we have? You want to zoom out. You want to mark any possible high. Boom, we have a high right here. We have a high right here. And our next high is all the way up in fucking Saturn. It'll be like right here. I'll just do that right there. And then what lows do we have? We have a low right here. It's gonna be this green candle right here. And it's gonna be this green candle right here.
Hey,
And
one thing with marking highs and lows so that your screen doesn't get too cluttered, because that used to be my screen too. Make sure when you see that one of these lines that he has marked out has ran through something, that you delete it.
yeah,
Don't leave it there, because then your screen is going to look like 1,000 lines at once. If you don't delete the highs, then you're just going to add too much stuff to your screen.
exactly. So like if for example, before New York opens, I would have this marked out. I would have had this Asia right here probably marked out. Probably would have had like this marked out. So you see how this can later on become a problem. The second it crosses it, if I'm looking at my market, I'm like, hey, that's crossed it already. I'm taking it out. Hey, this market has crossed it already. I'm taking this off. This hasn't crossed it. I'm keeping this on.
Yeah, what are you guys talking about? Liquidity sweeps?
Yeah,
Liquidity in general when you're marking it. And the
Uh,
good thing is with wait, Elias, go back. The good thing with like ICT kill zones, like those indicators, if you noticed where it says London, right? The highs and lows, once it's swept, that line is no longer there anymore. It tells you once it gets swept. For example, the high got swept earlier. That's why the line, like that line ends short. The London low got swept later on in the day. That's why you see that line ends over there. Those are indicators like, hey, look, this already got swept early in the market.
so yeah, and these indicators that you see right here are free. When I was starting off, I had my screen full of indicators. I'm not gonna lie to you. Now the only indicators I use now are fair value gaps, which is these boxes right here because I like to keep it on. Because sometimes you might miss a fair value gap. You might not notice. Like for example, you could have caught. Like for example, I said earlier, I could have caught this trade right here. Because technically, this fair value gap, this small fair value gap right here, this fair value gap got respected. Even though it's very small and it used to be very big, it got respected. You could have entered this trade way earlier up here and had a fucking crazy P&L. Probably like you probably could enter this trade probably in the middle of this candle, break a structure right here. You probably would have had your shit like up here. And then what are you targeting? What's your next low? Your next possible low is gonna be London low. Now you're banging a 4 to 6, a 4 6 to 1. So like that's why I say I keep the fair value gap one there because of stuff like that. Like I wouldn't see that like especially when you're in the market, everything's happening real time. It's not frozen like this. Like every that candle's gonna be moving drastically because market just opened at that point. So obviously you're gonna be sitting there, you're gonna be like, oh snap, okay. Like you might miss it. That's why I keep my fair value gap indicator and my ICT kill zones. Usually New York is like one is like yellow, the New York lunch is like green or some shit like that. I just put them all gray because that way the only color ones I see are Asia, which is blue. I know blue is Asia. I know red is London. That's all I need to know because I'm gonna be on for New York. I'm gonna see what New York is doing. I don't care about nothing else because I mean after New York AM, I'm not on the market no more. I don't care what happens here unless there's news dropping like FOMC at 2 p.m. That is when we're getting on the market at 2 p.m. So that is like exceptions, but that's later on for when I explain that. But now I'm going to show you guys. We're going to see if we catch a trade live right here. I'm going to show you guys exactly. So that's the first thing I do when I hop into the market. I instantly hop into the 1 hour. I'll hop into the 4 hour candle, and I'll see. All right, look, this is also a 4 hour low. We have a 4 hour high right here. This down here could kind of be a 4 hour low right here as well. 4 hour. Oh, we have a 4 hour high that got swept right here. So you got to look at the higher time frames. You might miss a liquidity pool. That's why you take those 30 minutes, 45 minutes before the market opens to really analyze what the market is doing. Next thing you know, what trend are we in? Oh, all right, we're downtrending. Why are we downtrending? Well, we had a weekly gap right here. We're downtrending. We had liquidity down here get taken. Now market's trending up. We've been trending up for a while now. We have another weekly gap right here. So we might finally start breaking down towards that weekly gap. You see analytics like that, because then now you're prepared to go into this market. Then I'm dropping into the 5 minute because then now that's when my kill zones pop up. All right, bet. What are we looking at right now? We had Asia kind of go up, kind of come down, and Asia distributed. But what did London do? London manipulated. Okay, London kind of consolidated. We can kind of see London kind of consolidate a little bit. It kind of ranged. Okay, what does that tell us? That New York is probably gonna have what, a manipulation, and then continue to whatever side the manipulation isn't going. So if it manipulates down, we're gonna continue up. If it manipulates up, we're gonna continue down. Or it could just go straight up, rip right up, or it could just drip right down. But we know that New York is now making the move. London didn't make a move, so New York now is on the stage to make the move. So now we'll wait right here. Let these candles stick by. We gotta wait till 9:30, 20, 25, 30. Boom, market open. And what happened right away? This is happening in real time. A candle like that will happen in real time. I kid you not. 3 seconds into market open, you'll have a candle like that. That is what I mean by, hey, don't enter when market opens. Yeah, we just swept like fucking damn near almost all three liquidities to the downside. But guess what? What did I say? London consolidated, so we're gonna have a New York manipulation. New York has to make a move. New York came down, took out liquidity. Boom, that's step one already done. We just swept liquidity. That's step one. Now we're going into step two. Okay, so now we have liquidity swept, right? Going to the 1 hour. It was 1 hour swept. Why are we going down? What did I say earlier? Why we possibly could be going down? We have weekly gap right here. Like I said, we could be breaking down to start going to that weekly gap. Boom, right here. Now I say FX Replay does have a news feature. You just press news up here. I have it here. We don't really have any red folder today. That's all medium. That's all medium news. That's all like might make the market move one direction. Like it's really like a, hey, keep an eye on this, but market might react somewhere. Oh, what day is it today? It's the 12th. 12, yeah, we got nothing here. Our next red folder doesn't happen. There's no red folder this week, it says here. Let's see and make sure that's correct. Yeah, there's no red folder on the news schedule right here. So, boom, we wait. What am I marking now? First thing I'm doing, I'm marking equilibrium right here from right here. Boom. You see, we cross these liquidity points, so I take them off my screen. You want as much noise that you want, and then you can mark this high right here, this 5 minute right here, which is also going to be that 1 hour high right there. So boom, now we have this marked out. Now we have a giant fair value gap right here as well. I'm marking it out myself because I can't be right here. We have a giant fair value gap right here. Giant fair value gap, and we have equilibrium. So now let's see how it trends. We'll drop into the 1 minute just to see it slowly react. But market could go up, market could come down for that liquidity, which it did. So what did market do? Market came up, tested this fair value gap. Basically, now your market's kind of looking like this now. We have fair value gap right here, and we have a kick down. What's that kick down? Well, we just took liquidity again. Okay, what liquidity is that? It's a 1 hour liquidity that we just swept. That is key. We just took a 1 hour liquidity. All that other liquidity that we took before, yeah, we had this 1 hour right here, but we took this 1 hour right here, which is, I'm pretty sure, is also a 4 hour. Yep, we're coming in taking this 4 hour. I'll mark this just in case it continues going down if it wants to take all of it. But we are in the 4 hour liquidity zone right now. So boom, that is key right there. And it is 9:40 right now. So, and market, holy fucking shit, market just fucking shitted the bed. So it is 9:50 now. Market is still dropping like a motherfucker. Whoa. Boom. So, oh shit, this is why it's hard to trade on this fucking website. realistically, this could be a test. This is more so testing the fair value gap, not equilibrium. Market kept trailing down, so realistically could have caught a trade on this. I didn't see it there, so I didn't take it. And now we're continuing to go down. So now, guess what? We grab our equilibrium. We're deleting this right here. We'll keep that fair value gap there. We're grabbing this now. Now let's hop into the 1 minute and let's see if we're gonna continue down or if this is gonna finally be a kick up. Boom, we're coming up. Do I have a breaker structure on the 1 minute? Going to the upside. It's coming back up. Get it kicked down. Boom. 9:55. That is the open of we have a breaker structure downside. You know what? Fuck it. Let's take this one. We'll let this one rip. Let's go 2 contracts. Gonna press sell. So we had it come up to equilibrium. Kept coming down. Market's obviously coming down. So guess what? We have our first high right here. Put above this second high right here. That's above equilibrium as well. $100 something bucks, right? Cool, 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 cool. Now what 1 hour can we target? Well, we do have a 1 hour low right here. Obviously, that does not look like enough. Our stop loss is not enough for that. So what other can we target? Target, that is previous day low right there. That would technically be a 1-to-1. You know what, let's let it rip on this 1-to-1. Possibly might not hit, but we'll let it rip right here on this 1 hour right here. Let's see if there's a 4 hour that we could target. That is our 4 hour right there. So yeah,
Hey, show
look,
him a
coming
TP
out.
smack real quick. Show him a TP smack real quick.
I hope it's a TP smack. I might move my stop loss now. I'm not gonna lie.
Remember this
Is that
trade?
there's like a
Yep,
this?
I remember this trade.
Did we take this trade or did you take this trade?
I took this trade last night
Oh,
with the
don't tell me
crackhead.
nothing. Don't tell me nothing. Don't tell me nothing. I want to see if I fucking analyze this card.
All right, I'll tell you.
Oh shit! I'm nervous now. Yo, I'm nervous now.
I think I
Zach,
took this trade too, bro. I think I took this trade too.
I
I'm not
took
gonna
this.
lie, bro. Yeah, we got cooked.
yeah, we got cooked on this one. Look, so we
I
get
took the
stopped
same
out.
exact trade.
Yeah, I took
Shut
the
up.
same one.
Hey, shut up.
Is this the one that Adrian? Is this the one that cooked your stop loss yesterday?
No. It didn't cook my stop loss
Shut
because
up.
it didn't activate it, so I'm good. Nah, but I don't think. I mean, it could have been potentially, yeah.
That's crazy though. So look, it's shit like this that yo this. All right. So just to get y'all for the class,
I still ended up
this
ending.
rarely happens, yo. This is like yo, the market hates you. That
No,
is
no, no.
insane.
Your balls will get tickled, but the thing is, you have to
That is
trust your trade.
crazy, yo. Look, so
You have to trust your trade.
you have to trust your trade. But yo, that is insane. We did not get stopped out. What the hell?
No, we didn't. Let it keep playing, motherfucker.
Yo, we're already
It's
gonna smack
crazy.
TP.
It's crazy how we had the same exact trade.
You're already gonna smack TP, all right. You're already gonna smack TP, all right. You'll see.
Zach, is this the
You'll see.
Nah, brother, I hate TP. I don't know
Zach,
about you.
this is the trade you just showed me, gang? Yo, I'm crying, bro. Is this the one that
You'll see.
fucking went on to the next day?
You'll see. You'll see.
Yo.
It's the same fucking trade I told you. That got me dicked out because I moved my TP. Remember the trade I told you? If I didn't move my TP, I would hit. That's the fucking trade.
All right, hey,
I
so
told
obviously we got cooked on this trade. Damn, we
you,
got
you're
cooked on
gonna
this
move
trade
my
hard as
TP, all
hell.
right. You're gonna take profit a fucking failure. That's for sure.
Oh
Remember that.
snap! Oh snap! Okay, it's all right, chat. We're gonna make it back on the next day. All right. Where's our next?
Here's another thing, right? Accept your wins and accept your losses because that trade would have been a TP smack for me, but I chose not to. I chose to get greedy and move my stop loss, my take profit down to make more money, and I ended up, as you can see,
Oh damn! I skipped the whole day.
what the trade did was fuck us in the
Oh damn!
ass.
Oh, oof. Well, we did fill that weekly gap like I did say we were gonna do.
I fucked
We
in the
did fill
ass.
that weekly gap. We just
Shut up, nigga. So,
yo.
yeah, don't move your stop loss and don't move your take profit, bro. Try to. This is
Oh,
what I see the best way to trade is like respectfully. Go for a 2 to
Oh, yo,
1.
we just missed the
Take your
entry.
partials on that 2 to 1. Go to break even with your last contract and let that bitch ride.
All right.
If you win, you win. You lose,
We
you
just
lose.
missed entry, chat.
Yeah.
Hey,
That's
all right,
why
we're
you
just
gotta
kidding.
put the candle
I
before nine
did.
o'clock. No, 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 no. You put it at 9 o'clock. That's your problem.
It's about a little nigga. All right.
Now stop it before 9 o'clock and drop time
Yeah,
frame.
we're just gonna go into Monday because holy shit. Oh my god, that's generational wealth right there. Generational wealth. All right, hey, we're gonna go to Monday. We're gonna bang. I'm gonna show y'all, bro. We're gonna bang a trade, bro. That's crazy. Zach, you were literally just talking about that trade at the start before the stream started.
I just showed you that
But
trade,
you
nigga.
just showed me that trade. I didn't even know. Once I saw the day, I was like, yo, what day is it? Once I saw the day, I was like, bro,
Change
we
your speed.
just.
Change your speed so you don't fuck it up. Change your speed.
I know. Hey, but I'm skilled in this. I'm skilled. You know what? We're gonna full for it too. We're gonna go 4 contracts deep. That's how confident I am in this strategy.
Don't teach these niggas how to butt fuck themselves. Go back down. We're not here to
Yeah,
full
you're
for. We're
right.
here to
Yeah, you're right. You're right. Hey, so don't full port, y'all. I don't full port. I'm just joking. It's paper
fuck up.
money,
You're a
but.
liar. We've all had our days when all it counts.
Oh yeah, we've had our days. So I don't full port no more, yo.
No more. No more. No more.
You know, here and there. Yo, this candle's having AIDS. Okay. All right. All right. It's fine. It's fine. It's cool. It's cool. It's cool. It's cool. It's cool. All right. We're basically at 920 right now. We had a pre-market super this low right here. We obviously have this previous daily low right here, which is also going to be our 1 hour low. We have a 1 hour high right here as well. It looks like market did break structure, so I'm thinking we're going bullish on the day. That's going to be my bias right now, looking at this market right here. We also have this right here, and then these are also last week's fair value gaps that are also called imbalances. Fair value gap imbalance are basically the same thing. Basically, a gap in the market that hasn't been filled is making the market not be stable. Imbalance. So, what's it called? Coming up right here. Obviously, you just got done, having gay sex. Like if your name's Adrian Perez, you just got done having gay sex at the gym. Or if you're a normal person like me and Zach, where we just hit the gym, no gay shit going on like Adrian Perez, and what's
Nigga,
it
you don't
called?
hit the gym.
And you're here for market open. So what's it called? So boom, 9:30 starts. Whoa, bullish. Okay, we're bullish. 9:30, right? 9:30 open. We're bullish. Boom, right here. First thing I'm doing, I'm marking equilibrium on this first candle. This first candle goes all the way down here. Boom, we have equilibrium right there marked. Oh, what did London do? London. Well, we have consolidation and then we have manipulation down. So what do you think? What do you think New York is gonna do? Reverse. Right, right here, we have equilibrium setup. We got a giant fair value gap, and we have a breaker structure from right here. This right here, by the way, is our breaker structure. That candle right there is our breaker structure. Not the one up here. This one right here, because that's the last high made. That was the previous high made. So, we're going to the 1 minute right here, so we don't get cooked. We gotta basically do everything in the 1 minute. So now we're here. It's 9:35. That'd be 9:35. Next 5 minute candle. Boom. We have a kick right here. Up, up, up. Nice, smooth. 3, 4, 5. Boom. That is our 5 minute right there. So what are we doing now? Market hasn't came back down. We're just gonna move our equilibrium back up. Go back into 1 minute, and we're just gonna wait for our kick down. Boom, kick down. Coming right here. Boom. On the 5 minute, still looking bullish. Just gonna move it up. Come back here on the 1 minute. And there we go. We're starting to see market rejection right here. It is 9:45. This is when you should be looking to enter your trade. After 9:45, you do not want to put in a trade before 9:45, but it depends on market experience. And once guys start getting market experience, you guys will learn what days you'll want to go on. Boom. Obviously, we keep trailing up. This is looking real bad right now. Market is just going up. So guess what we're doing. When did that appear? What the fuck? Yo, did y'all see this pop up right here? I did not see this before. Well, it looks like we missed entry, but it would have been right here on this if this popped up before. I swear I didn't see that. Probably losing my mind, y'all. I didn't see this bearish candle pop up right here, but this bearish candle was a retest of this fair value gap right here, which would have been good to go because on the 1 minute you would have seen a breakout on the 1 minute. Probably this right here. This right here would have been your entry right here. This probably would have been your entry right here. This is a pretty shitty target right here, though. I don't really like that trade. What other 1 hour can you target? Probably something like up here. You did take that trade. And you hop on the 5 minutes since we don't have a low. What am I doing? I'm just going to set my stop loss right under here. Right under this 5 minute fair value gap. I feel comfortable setting my stop loss there. That is a 2-6. That is a 2-4 to 1 RR. So if you did take that trade, we'll keep staying on the 1 minute because we were bullish on the day. I think we just missed our entry. Boom. Great thing we didn't take that trade because I'm not delusional. So hop back on the 5 minute. That was our old equilibrium. So usually when this move down happens, you're gonna want to mark this and this. Because that's your new equilibrium now, because the move came down. This obviously disrespect the equilibrium. You could have taken a short right there. But what do we get? I guess I don't even know if this counts anymore. I guess it's retesting equilibrium of this move. We'll see if we get a kick up. But realistically, now that we went short, we're still thinking bullish because this looks just like a retracement. Grab this right here. Boom. What time is it? It is 10:05. So we are still open for another hour to find a trade. Someone, I don't know what just happened. Someone just evaporated out of Discord. All right, it doesn't matter. Come back on the 1 minute. Oh, we're getting a retracement of this equilibrium right here. Fair value gap. Volume slowing down. Boom, get kicked down. Break a structure. Guess what's happening now? At this point, I'm going sell right here. I'm comfortable doing that because it came up, came back down, came up to retrace this, came back down, break a structure to the downside on the 1 minute. Break a structure, and we're getting a fair value gap right here. This looks like a way better entry than what was earlier. Because guess what? We have a high right here. That's our first high. We have oh shit. We have a second one right here. I'm putting it right above these highs right here. Boom. And what am I targeting? 1 hour low. 1 hour low. 1 hour low. We have our 1 hour low all the way down here. So let's stretch this out a little bit. Pause. I think that is pretty banger right there. I don't know what y'all think.
I remember this trade. It's a TP smack, I think, if I'm not mistaken.
This is what I'm
That's a good trade.
looking at right here. And we take it short. Yeah, real TP smack.
That's going down.
Well, would have been the TP smack. Again, we get cooked. To be honest, I'm not gonna lie. Where did I enter? What the fuck is my entry here? Wait, hold on. I'm kind of losing my mind. Let me take this off real quick. We didn't enter back here. We entered. Retested this one. Boom. Oh, so we entered like this candle right here. Realistically, that's not bad of a stop loss at all. We just end up getting cooked. But this, even just your stop loss a little bit higher, would have saved this
Elias, how
trade.
much would that be? How much would that stop loss be, Mahomeno? The stop loss.
It depends. That's a 1 to 2 too.
Stop losses, like the amount, Adrian, if you're asking, it's all personal.
Yeah, it's all
It depends
personal.
on
It
how much you
depends.
risk.
Yeah, it depends how much you risk. That one was
but you're not,
$100
but
for
you're not.
me.
That's what I'm saying. You can't tell what your stop loss is going to be unless you see how many contracts you go in for.
hmm
Yeah.
That was $100 for me. We're still profiting the
So
account,
Oh,
but
good.
we've taken fucking
So you're
losing
not
trades.
putting in the trade. So you're not putting in the trade. You're just charting it.
No, I am
for
putting in the
this,
trade.
no, you're not.
Yeah, I am.
You didn't
I
click
lost.
buy.
I clicked sell. I lost money on that trade.
Well,
Look,
oh, that, why didn't you put your stop loss at the high?
right here. I
Oh,
lost $100.
why didn't you put your stop loss at the high?
Which high?
Go on the 5 minute. The,
I mean,
high.
it
Oh
technically was.
no, where'd you get in?
I got in on this candle, so my stop loss was above this. It was right here.
No, I would have put it above the previous high.
That is,
Or
there's a
no,
high
no,
right here. Second high is right here, so I put it above my
no, no,
second high.
I count that all as one high. I'm talking about the one right before it.
Oh, I don't really
That
care. I
high.
mean, you really could. To be honest, I didn't really see that one there. You really could, since they're basically these are kind of stacked highs. These are very stacked highs, so liquidity does like to just grab it all at once. That is
Yeah,
something I forgot to mention. Happens. And that's the great thing about backtesting. You get to look back and see your data. But
I took the same
when it
trade.
yeah when it has stacked highs like this, I would just put it. And especially if it's only a few pips away, like what are you losing? Like $10
Yeah, I
more?
put it at the higher high between the
Yeah,
both of those two.
yeah. I mean, yeah.
For the
I
fact
was
that
losing. I should have just put it above that one. But it's stuff like that that now when I go to my live account, now when I go to my funded account, I'm
yeah,
gonna
you know
look
what?
back and be like, hey, I remember I back tested something like this. Let me put it above this high. And you see, you guys. I mean, this played out. I mean, exactly how I said it would. It did go all the way down. Just I had my stop loss. Stop loss placement wasn't there, but it happens. But that was good execution. You will have the times where it cucks you like this, like it did earlier today. Like, I mean, for fucking like earlier today, if we hop into 1 minute, I was getting cooked like that earlier today too. I mean, look at this. I enter, I'm in down draw right away, and it goes down. I'm thinking we're gonna get TP smack. It comes back up, goes down. I'm thinking we're gonna get TP smack. Comes back up. I'm thinking, oh, this trade's cooked. I'm gonna just hold it. Comes back down, and we finally get a TP smack. Stuff like that. And this was what from 10 o'clock to damn near almost 11. Basically an hour of just looking at myself getting blue balled. But yeah, you guys see this. Obviously, you guys are gonna practice. I'm over here getting cooked. I'm also like just kind of trash. But what's it called? You guys see the strategy playing out. Obviously, I'm just fucking trash, and like I don't know what the fuck I'm talking about. So, um, yeah, that's gonna be it for today. That's gonna be it for today. We've gone over basically all the steps. Now, next class is basically just gonna be us on FX replay, just showing y'all strategy, showing y'all strategy. What would you do in this situation? What would you do in this situation? What would you do in this situation? Now, FX replay isn't going to be 100% accurate because you also can't use news and stuff like that. I like trading news. I think trading news is probably the best time to trade. Um, there's just added confluence like that, and it's just not the same as actually trading. Like real time and stuff like that. Because in real time, like this candle, for example, like I'm possibly like entry like would have been way easier, especially on this short right here. This short coming off this sweep of this high right here, this short could have been such an easy entry. But since our market right here and FX replay is moving so fast, I didn't even have time to mark this equilibrium, see this complete get disrespected. Because then now you see this get disrespected, you see a fair value gap form. You're probably taking your short like right here. You're probably putting your stop loss like right here. And now what low do you target? Obviously, you're going to target this previous low. Now you're getting a way better entry. You're getting a 3 to 3.6, possibly risking the same to earn more. If not, it just depends how much you're risking. But it's a good way to be able to see the strategy for you to actually put in trades, get used to seeing how the market fluctuates and stuff like that. So yeah, that's gonna wrap it up for today, y'all. Next class will be